Unlock the millionaire mindset. Explore the 7 income streams fueling the affluent's wealth and financial prowess. Have you ever wondered how the wealthiest individuals make their money? The financial landscape of the rich and famous is often veiled in mystery, but a glimpse into their tax returns sheds light on the various income streams they harness. The IRS, in a revealing study titled Over the Top, How Tax Returns Show That the Very Rich Are Different from You and Me.
The IRS did a study that wealthy people on average have 7 streams of income. 65% of the self-made millionaires had 3 streams of income, 45% have 4 streams of income, and 29% have 5 streams of income. It took these people on average 32 years to become millionaires, and they are ages between 46 to 60. The truth is, a vast majority of millionaires in America is self-made millionaires. Fidelity Investments also did a research and found that 88% of millionaires are self-made and only 12% inherited their money.
Uncovered 7 common income sources among millionaires and the ultra-wealthy. These insights provide a roadmap for anyone seeking financial abundance. Number 1. Capital gains from appreciated assets. The allure of capital gains from appreciated assets lies in their ability to transform potential into tangible wealth. Take the case of Elon Musk, facing the need for immediate liquidity during his Twitter deal.
Tesla CEO Elon Musk has sold nearly 7 billion of his Tesla shares. After the Twitter deal controversy, Musk made a shocking move as he sold $6.9 billion of his Tesla shares on August 5th. The futuristic CEO said that it's important to avoid an emergency sale of Tesla stock after selling his shares months ahead of his Twitter trial. Musk broke his statement that he had no plan to sell Tesla shares again.
His strategic move of selling $7 billion of Tesla stock, acquired through a compensation package, epitomizes the savvy maneuvering of the wealthy. These assets, often in the form of stocks, serve as a reservoir of value, allowing millionaires to convert them into liquid assets when financial needs arise. The game isn't about immediate income, but rather astute management of assets that can be translated into cash reserves when the time is right. Understanding market dynamics, identifying potential growth stocks, and timing asset conversion are key strategies in leveraging capital gains. Number 2. Dividend income and passive earnings. Dividend income stands as a testament to the dual benefits of asset appreciation and regular earnings. Millionaires, exemplified by Elon Musk's strategic stock sales, leverage dividend-paying stocks for consistent earnings. These stocks function like a financial engine, providing regular income while retaining their value, akin to the fabled goose-laying golden eggs. The ability to balance asset appreciation with steady earnings distinguishes this income stream, offering a reliable flow of funds without liquidating the principal investment.
I mean the annoyance though of like people holding it against you that you've had success, holding it against you that you have wealth, viewing billionaires as evil and you're not doing enough to give back. You have like the Elizabeth Warren thing that you haven't paid your fair share. I mean that's got to be kind of aggravating.
Yeah, I think it's just important to understand like what is this wealth? It's not like I've got like some massive cash balance. My cash balances are very, very low. And at least until I sold stock, which is really the first time I've actually sold stock in any meaningful way, was this quarter. I simply had loans against my stock. So if Tesla and SpaceX went bankrupt, I would go bankrupt too, immediately.
Moreover, the potential for substantial windfalls from selling these assets underscores the strategic wealth management approach of the affluent. Passive earnings through dividends offer a compelling combination of stability and growth. For the wealthy, these investments represent a long-term approach to wealth accumulation, where assets generate income without requiring active involvement. The allure lies not just in the regular cash inflow, but also in the potential for compounding wealth over time. By maintaining a diversified portfolio of dividend-yielding stocks, millionaires secure a steady stream of income while fostering the potential for exponential growth. This strategic balance between consistent returns and future wealth appreciation characterizes the shrewd financial planning employed by those seeking long-term financial stability. Number 3. Interest payments and blending. Interest payments serve as a fundamental income stream for the affluent, showcasing a paradigm shift in wealth accumulation. Unlike the average consumer who pays interest to financial institutions, millionaires strategically leverage various lending vehicles to accumulate compound interest.
Would you explain what compound interest is, how you calculate it, why it's so important to understand?
So I think it's easier to calculate and understand when you do it in the bad way, like what your credit card does for you if you hold a balance. In a good way, essentially, if you invest $1,000 in a bank account, and let's say you're lucky enough to get 1% interest annually, you'll get $100 for that year. After year one, now you're investing $1,100. So your 1% is not just 1% of $1,000, it's 1% of $1,100. Then year two, you're sitting at $1,200 and change. Then your 1% on year two is calculated with that $1,200 and change instead of just that original $1,000 invested. Alternatively, if you have a credit card debt, that's happening in the wrong way, and it's a lot bigger of a percent, 20 to 30% is getting added to your bill.
High-yield savings accounts, bonds, and participation in peer-to-peer lending, they create a web of financial instruments that generate substantial returns. The concept of money working for them elucidates this income stream's essence, emphasizing the importance of deploying capital in ways that foster continual growth. Diversification across lending platforms further fortifies their strategy, mitigating risks while optimizing interest earnings. This approach not only cultivates wealth, but also fosters a culture of financial literacy, where each dollar deployed has the potential to generate more than its face value over time. Number 4. Rental income and real estate. Real estate remains an enduring cornerstone for wealth creation among millionaires, amplifying the allure of rental income.
This is the strategy that people employ. They buy a property, you fix it up, you rent it out, and then you refinance it and say it's now worth $100,000 more than what you bought it for. You can get a loan for that exact amount, which you then use as a down payment on another property, rinse and repeat. Do I have that right?
So let's say the property goes from 1 to 1.1, they'll give you 70 to 80% of that. That extra $100,000, they give you $70,000, $80,000 of that.
It's just that simple, folks.
CNBC's reference to Andrew Carnegie's assertion finds resonance in the contemporary landscape, underscoring how rental income perpetually flows in, securing financial stability. Property ownership, particularly through the lens of rental income, serves as a dependable and passive revenue stream for the affluent. Strategic acquisition and adept management of properties underpin this income stream, showcasing real estate's evergreen role in fostering wealth creation. The ability to leverage real estate assets, whether through residential or commercial properties, illustrates a keen understanding of market dynamics and the value of passive income. The cultivation of a diversified real estate portfolio not only secures consistent cash flows, but also offers opportunities for substantial appreciation, further cementing its status as a primary avenue for wealth accumulation among the affluent. Number 5. Business income and entrepreneurship. Entrepreneurship stands as a significant pathway to wealth among millionaires. CNBC's insight into their frugal lifestyle and dedication underscores the rewards of perseverance and innovation. These individuals prioritize savings and invest substantial effort into their ventures, showcasing a commitment to building sustainable income sources. By embracing risk and leveraging their unique ideas or solutions, entrepreneurs carve a niche for themselves in the market, often resulting in substantial financial rewards. The entrepreneurial spirit, coupled with a tireless work ethic, lays the foundation for business income as a pathway to substantial wealth accumulation. These entrepreneurs don't just create businesses, they create systems that generate income, independent of their direct involvement, fostering long-term financial stability. Number 6. Earned income and diverse careers. Tom Corley's classification of millionaire earners sheds light on the diverse paths to wealth. Whether through exceptional talent, corporate ladder climbing, or becoming savers and investors, diverse career trajectories pave the way to riches. The distinction between savers, climbers, and virtuosos illustrates various career paths leading to financial abundance. Those identified as savers prioritize strategic saving and investing to accumulate wealth steadily. Climbers dedicate themselves to ascending the corporate hierarchy, leveraging high salary positions for financial growth. Meanwhile, virtuosos excel in specialized fields, using their expertise to command substantial earnings. Understanding these diverse trajectories showcases the multitude of avenues available to individuals striving for millionaire status.
Anybody in here want to be a billionaire? I'll tell you right now how to do it. It's really simple. I would rather spend $1 million to go sit down with Warren Buffett and ask him this question. Warren, can you tell me when you think the market is oversold? I could never know as much about the market, nor have the connections that I have. All I need to know, because I understand the math of markets, is if Warren Buffett told me the market was oversold, I know exactly what to buy. And I'd buy a shitload of it.
Highlighting the importance of strategic financial planning regardless of career choice. Number 7. Intellectual property and royalties. Intellectual property and royalties stand as hidden treasures contributing substantially to the wealth of millionaires. Beyond the realm of celebrities, owning patents, products, or proprietary rights allows continual income generation through licensing and royalties. This lesser-known yet lucrative income stream underlines the enduring nature of intellectual property in wealth accumulation.
My biggest moneymaker is called IP, intellectual property. Zero investment. So when I create that cash flow game, it's intellectual property, it's patented. It's in 50 different languages. Every quarter they send me a check. Zero investment into it. When I write a book, like this book here, I think I make about $600,000 a month just from royalties coming off this book. Because I sell the book to a book publishing company, and they send me a check every month, every quarter. When I write a new book, like Who Stole My Pension, more money comes in. But it came out of my head. It's not real property, it's intellectual property. And all of you as entrepreneurs have that intellectual property in your head.
Individuals possessing valuable intellectual assets benefit from perpetual revenue streams, capitalizing on the consistent demand for their creations. Be it branding, patented products, or innovative solutions, owning and licensing intellectual property establishes a continuous flow of income, showcasing the diverse portfolio strategies employed by the affluent for sustained wealth growth. This income stream highlights the importance of not just tangible assets, but also intangible creations that hold significant market value. The ability to monetize intellectual property reflects astute foresight and investment in ideas or innovations that resonate with consumers. By holding rights to valuable intellectual assets, individuals secure a steady revenue source that often transcends industry fluctuations, contributing significantly to their overall wealth portfolio. The financial playbook of millionaires reveals a diverse array of income sources, from astute investment strategies to entrepreneurial ventures and intellectual property exploitation. Understanding and implementing these principles can pave the way for financial success and abundance, regardless of your starting point. So, whether you aspire to emulate Elon Musk's stock tactics or embrace the entrepreneurial spirit, these income streams offer a roadmap to financial prosperity. If you found this video informative, then don't forget to hit that like button and subscribe to our channel for more amazing content. Thanks for watching.